The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to have a program change next week, folks. Starting on Monday, I'll be doing the show at noon, New York time, and I'll be looking forward to that. Today's guest will be Jerome Bressert, the son of Walt Bressert from Hal Commodity Cycles, going back in the art ages of Moses and Pythagoras. It's been a long time. Anyway, he'll be our guest. He's a fine young man following in his dad's footsteps, and Walt was one of the groundbreakers in cycles. I met him in 1970 in San Francisco at the Hearst meeting. Now, I do want to show you the first chart, which is the DAX index. You'll notice that 3 drive to a top pattern that was on the daily. That has completed. It started to sell off a little bit, so I think that's important to pay close attention to. And the second thing that I'd like to bring to your attention is the gold market. If you'll remember yesterday, one of the things that we decided to do was to take off our long position we bought down there at 1677, and we took that off at 1728, and the market got as high as 1739, and then last night it pulled all the way back to the 61% retracement. Now, be careful what you ask for, because sometimes it's not what you want. But we got right down there to the 699 level. We were able to, the low was 696.90, and so we bought that with a stop at 1694. Frankly, folks, I'm bullish gold, but my golly, when it gives that much up that fast, I mean, we gave back we gave back more than a harmonic number. We went from 39 all the way down to 96. That's $40. Now, it's got to get moving today, and if you're in gold and it doesn't close well today, and I mean well, it's got to close well above 1702, in my opinion, for it to be good. But if you're in the gold, make sure that you use a stop, folks, because when these puppies fail, and remember, we still have a potential for the continuation chart, the April gold futures, to take us down to 1640, which is the 382 in the April futures contract, because the continuation is different. So you've got to factor that in. And that's what we're trying to do, is to do this. I'm working with TFNN to get these things out to you faster if I can, and I'm certainly going to try to do that, but I do the best I can to try to get these things lined up. So anyway, they're lined up pretty good there, so take a look. We're going to have Jerome Bressert here in about 6 minutes, but I want to show you something, folks. We're going to go back in history for just a little bit. If you'll remember, we had a little thing called the coronavirus. Let's just take a look at this here. When we had that coronavirus, there's where we were, and we were looking to be a seller up there, because that was a 5-wave expanding triangle, a reverse point wave. You'll see each wave is higher or lower than the previous wave. And from there, in the Dow Jones, we went all the way down to 18,000, I believe was the low. We went from roughly 30,000 down to 18,000 in the Dow Jones Industrial Average. We didn't get all of it, but we got a nice piece of it. Well, here we are, sitting here today on the 12th of March, and we're going to take a look at, it's a T6, by golly, Marshall, you read the book. Marshall's telling us that it's a T6 pattern in the Gartley book, and that's what Wells Weidelder used to find his reverse point wave. It's also the T6 pattern, but look at this pattern we have here now, folks. You see where 0.3 was? We went all the way down to under 18,000 in the Dow. Now we're up to 32,000. What's going to happen next? Pay attention to this week's newsletter. There's going to be some neat little charts in there that I think you'll be interested to pay attention to. But this could be very interesting coming up here very closely. And not only that, we're over a new moon today, so it's going to be fun to watch. Okay, let's remind ourselves, folks, that the bonds are in big trouble. Let me tell you, they are down, making new lows again. We're touching below the below that 56 level. they're going to have to come in here and do something pretty soon, and whoever they is going to have some problems, would be my guess. So let's remind ourselves that these markets sometimes can exceed our expectations over and over again, and I think that's an important thing, to pay close attention to. Also, we've had a request to take a look at Dr. Copper, who has a PhD in economics, and you'll notice even though we've made new highs here the last 7 days, the last 7 weeks. Back on February of the 24th, we made a high in copper at 438. We made a big ABCD down at 386. We have not been able to exceed the 61% retracement in the last 10 days. That is not good action, folks. And so Dr. Copper is telling us maybe there's a little bit of cautionary note in the wind, so we need to pay close attention to it. If you have any questions, it's 877-927-6648. So we'll be watching if you have any questions. And usually, you can't. I was just informed by TFNN that the lines are just solid full right now. So you have to wait a few minutes before you can get in and take a quick look at that. Okay, now let's move on to that GameStop. Hold on, maybe we have a question coming in. Shut the front door. Oh, one line. Oh, Al's just told us one line has just popped up. So if you've got a question, get it. Oops, it looks like it's closed already. Sorry, folks. Yep, there we go. We'll have operators standing by, so just bear with us if we can. All right, now let's move on to that GameStop that we've been following. It went nuts, as we usually thought that it would. And look what this I want to just show you the how well it forms off of these Fibonacci numbers one more time, because they're doing the same thing in everything else. You'll see here, there's where we are here in the GameStop. Over a 4-hour chart, you can see the wild action we had. We got up to the 78% level. Then it dropped in half, folks. We already showed that, but we're going to show you again, because I think where the target is going to be easy to find, and then we'll be able to take a look at. Here is the GameStop as of yesterday, and you'll notice we went up to the exact 61% retracement after dropping in half. We went from 170 back up to 280. So you do the ABCD structures on this, folks, and you're looking at a market that's going back to 124. And that's not very far away when you can do that much in 4 hours. That's it. Okay. Anyway, David is saying when bonds rule, equities drool. Well, David, I don't know if that's the case or not, but all I know is the bond market is really starting to look a little bit scary. It really is. Today's a really important day because if we close below into that 55 range, the only other range that I see down there that makes any sense is somewhere between 149 and 139. And that means that interest rates are going up into the U.S. government, so they're going to have to print even more money to pay for the fictitious interest rates. So it's going to be fun here. It really is. This is why I'm hoping to spend more time and get a little bit closer to the markets with my folks from 24/7 Fibonacci Group here at TFNN and get to them so that they can see the markets quickly. I'm going to have, hopefully, I'm going to try to have a private a line here that I'll be able to send stuff out, something like Telegram, but I don't know yet. I'm just, I'm so technically inept. Hey, we're going to take a break. We're going to have Jerome Bressert when he comes back. Don't miss this.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, with great pleasure, I would like to introduce Jerome Bressert, the son of Walt Bressert of How Commodity Cycles, going back in the days of Methuselah and Moses. Jerome, how are you?
Hey, Larry. Thanks for having me on. I really appreciate it. My dad remembers you very well, and he's obviously gone, but I remember you coming to my house back in the day. So, welcome to Tucson.
Yeah, how do you like living here? You're from Chicago, pretty good, I guess.
Yeah,
huh?
Well, I came down here because my daughter had a baby, so I came down here to help her out. I was living in Playa del Carmen for 5 years, and I came to Tucson, which I went to high school here, and I love it. I live right near the Catalina Mountains, and it's 50 degrees, but it's going to be 75, 80 degrees today, so I like it.
Yeah, that's good. Tell the folks a little bit about your commodity background. I mean, living in the shadow of, a real icon in our business. Folks, you don't know this, but the reason why you have these charts and stuff is because of Walt Bressert, because he was working with Tim Slater with CompuTrack back in the early 80s. I'm talking 81, 82, 83, developing this stuff so people would be able to see it on their desktop computers. Do you even remember that, Jerome? I mean, that was a big deal.
Yeah, well, my dad started out in 71, and he married my Playboy mom, and that's when I met him. So he's really my stepdad, but he's really my dad. And I at 6 years old or 7 years old, I would sit there and watch him do his charting, and and he had a CompuTrack. He had, all these different, things he was doing all by hand. There was no computers back in the day. I mean, the first computer we got I think it was an Apple II Plus. And he would do a newsletter called How, which, high and low, commodity cycles. And that was the name of our dog as well. And I would just watch him do his thing, and he just kept making money, and I was kind of attracted to that. So I watched him, and so when I went to college, I said, well, geez, no one's teaching me what my dad's doing. So I just jumped out and jumped right in as a commodities broker. And I handled all his accounts. He had like 3,500 accounts. So I was very excited to work with my dad, and we laughed a lot. And he was a genius. I mean, he figured out stuff that he figured out stuff that nobody else could figure out. He figured out a pattern, and there's a book called Chaos. And he said that there's a pattern in the chaos in the markets. What looks like chaos is really a pattern. And I adapted to that, and so I just took it from there.
Wow. Jerome, we're going to have you on more than once. We're going to have you on as a regular guest, hopefully. But do you remember the pattern that I think it was Walt that got? It was the Lindahl Wiggle. Do you remember that?
Yes, the Lindahl Wiggle, which is kind of what I call the Jordan entry as well. And in fact, it's sort of, you know, if you're looking at my screen here, I'm not sure if you can see my mouse. I don't know.
Yes, yeah, we're in good shape.
Okay.
Yeah.
So Lindahl Wiggle is right here, where you go where the market's going down, and then you have the up close, and then you put your sell stop right there, and then boom, here it is again. There it is again, or actually right there. There it is again. And then it didn't happen there until there, and it happened there, and happened there, and happened there, and happened there. So the Lindahl Wiggle, there's a guy named I forget his first name was
Gary. He was an ophthalmologist. He was an orthopedic surgeon up in San Francisco.
That's right, exactly.
Yeah,
I remember
he was now. I had an account at him at Drexel, so I knew who he was and met him a few times.
Yeah. So when you look at the markets, you know, this is a 5-minute NASDAQ chart here. It's a live chart, and it looks like chaos. So the market's going down, it's going up, it's going down, but there's actually a formation to that we've identified, and so we take action on those formation, which we call models. We call them trade models. Okay,
why don't you go ahead and you'll talk to us about what you're doing, and I would really like to. It's just like old home week for me talking to you, Jerome. So please take your time, and we're going to have you on again. So do what you can today to show the folks what you're doing and how you're doing it and how they can reach you. So just go ahead. You've got the line.
So I'm going to show you 2 pictures here. Here's a picture of my dad and I when I was 6 years old. And this is my last picture with my dad before he passed away. And he wrote, you have 3 choices in life: give up, give in, or give it all you got. And so that was in San Miguel de Allende in Mexico. That's where my parents moved to. So what I have here is a risk disclosure. Please read the risk disclosure on the website pertaining to everything I say. And the next thing is we have trade models. So what we're going to talk about is the Keltner band angle, the first one, which is right here. And this is actually a really good example. I didn't realize it until I brought the chart up this morning. But there's an angle to the Keltner band, and we use a 15 EMA. And if the angle of the Keltner band is at 45 degrees, right, you don't really want to be on the other side of that coin, because the market's, you know, it's going down, and we recognize that as a trend filter. How about that? And we use the angle, either the upper or lower band, as our trend filter. And you can see last night, it's actually a perfect example. I mean, you can see it went down 45 degrees right here and just kept going. And there was no reason to buy this market until we went flat, right? We didn't go flat until right here. And look what the market did. It went up. So that gives value to your clients or your customers here online, where when you see this kind of angle, you want to be on the right side of that angle. And that's explained here under the education side to give information about that. And the second thing is the moving average. What we have is, if the market's trading below, well, let me put it this way. All markets trend, in my opinion, I should say, all markets trend below the moving average is a 15 EMA. going down and above the moving average going up. So here, what we have is what you call a moving average entry. Okay, it's number 2 here. And what that does is says if the market's at a 45-degree angle down and it goes back up to the moving average, you want to be short that market. And right here is a great example. Here's another one. It didn't really get there as much here. And then as it's trending up, came down to the moving average here. And now we're moving down. Currently, we're at a 45-degree angle right now on the market opening here. We're almost at the market opening, and we're right at the MA. But I figured that most people cannot.
We'll take a little break here. Jerome will be right back with you.
Okay, thank you.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. We're talking with Jerome Bressert of Alpha Hunters. Go right ahead, my friend. You've got a clear view for the next 25 minutes.
Okay, hey, I appreciate that, Larry, and I appreciate everybody being here. I mean, my whole thing is to give informational ideas that you can use in your trading. Now, one thing that we were talking about is the EMA trade. So you can see the market's going down here, and then it comes back up to the MA, and then there's a sell. Now, you can use it a couple different ways. One way is you can wait to take out the open of the up close bar. And that may be a little bit less aggressive technique, but you also can sell at the MA if the angle of the band is at a 45-degree angle. Right now, this is a live chart. This is what they call a fell, what I call a fell, where it goes above the MA and then drops down below, and that's exactly what just happened here on the open here. And that is another trade. So it goes, we're trending down. We have a 45-degree angle, come back up above the MA. That's a fell. There's your sell, and back down. Now, what I was talking about before is I believe nobody, not your mom, your uncle, your aunt, your cousin, your mom, anybody, can tell you what the top tick's going to be. Nobody. Or the bottom tick's going to be. So what we do is money management. And we suggest that you don't go all in on your first trade, ever. And we say you scale into trades and you scale out of trades. That's called money management. That's what my niche is. A lot of times I might be in a trade where I will be down from my first entry, but still make a bunch of money. And how is that possible? Because of money management. And so that's our niche on how we do things. So let's say you have the ability to trade, 50 contracts, right? Or what have you. You start with 2 and you scale into the trade. So you always reach for a trade, which we call go fish. And so if you feel like the market's here at the MA, you may want to go up in the NASDAQ maybe 20, 30 ticks to sell on that kind of model. Because how many times have you been in a trade and you were down? Come on, everybody has, right? Every time you get in a trade, you're always down. So why don't you just go fish and get a better fill price? So when you feel like you want to buy or sell, then reach for a fill price. In my opinion, you will be better off. That's your starting point. And that's how that works. Now, there's another model we call never be left behind. So that's over here. Number 3. Never be left behind is you think the market is just absolutely taken off. And you feel like, God, I wish I could be part of that. But you don't know how to handle the model. Well, here's the model. Here's a good example right here. Let's say this market came down and you're like, gee, I wish I could be part of that. But you don't want to sell here, but can you? The answer is yes, you can sell there. And the way that works is you can enter at any price. Now, we always suggest you go fish for a fill price. Even in the NASDAQ, it might be even 4 ticks or 8 ticks. Well, that doesn't seem like a lot, does it? But if you think about it, if you do 100 contracts a day or 200 contracts a day, that adds up. If you're able to fill your entry price by 4 to 8 ticks in the NASDAQ, or the S&P might be 2 to 4 ticks, that's $50, right? And that pays your costs for commissions and things of that nature. And the way it works is you can enter any market and use the high of the previous bar as your stop. To at least your initial stop. If the market continues down, then you can use the open of your entry bar as your stop. And so that's how that works. You can see it here. Now this is what they call a Jordan entry, which a wiggle, Lindell wiggle entry, where the market went down and we have an up close. Now, a lot of times we have what we call a 4 to 9 bar cycle in all markets and all time frames, which means that most markets will go 4 to 9 bars in one direction, which is called a cycle, right? Cycle low, cycle high. Along the way, you're going to get closes in the opposite direction. And this is exactly what this is. So when the market came down, it came up, and then went down. And right there is your entry. When it's on the sell side, usually you're going to be in the trade maybe 30 seconds to 2 minutes tops or more, but it happens pretty fast. On the upside, because markets go down at 90-degree angles and they go up at 45-degree angles. I don't know if you notice that, but that's how it works. So the sells are a lot faster on your entry. So what we do is we'll put a sell stop right here at the bottom, at the open of that green bar. And then we take what we call take your halves off. As we're making money, and this is what my dad drilled this into my head. He goes, Jerome, make sure you take your halves off. Well, he did it in thirds, actually. And I go, what do you mean, Dad? He goes, well, nobody knows where the market's going to bottom or top. He actually said the same thing. And I go, okay, so you got to take your profit off. You got to take profits as you're making it. And I go, well, okay. And I can tell you right now, in our trade room, we have a live trade room. If I did not take my halves off, it would be a disaster. So when you're trading, my suggestion, at least, my opinion, is that you take your halves off. So if you have 10 contracts on, you take 5 off. And why would you do that? And the other thing is, why didn't you go all in on the trade? Remember, nobody knows where the top price is going to be, right? Remember this sell I was talking about? Look where we are right now. That's called a fail, because nobody knows, right? Nobody knows exactly where the market's going to bottom or top. But what you do have control on is what you do. And that's why we take our halves off. A lot of times we might say we sold this here, we take our halves off. We may sell that back up here, depending on if it's ops down. Ops means open pivot. It's either above or below the open of the previous bar. Now I'm going to share with you what they call a reverse stab buy. Now, I termed the name stab buy just because I said, well, take a stab at it. And what is a stab buy sell? What it is when it goes below the 1.5 deviation. And you can see on my market pulse, I have a.
We're going to take another break, Jerome. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back with Jerome Bressert of, I think it's called Alpha
Hunters.
Alpha Hunters. Are you? Is this all computerized, by the way, Jerome?
Yeah. Well, what we did is we systematized a lot of things. You see a screen here called Go Fish Pro and Market Pulse on your screen, but the idea is we use these programs to automate our trading once we enter the trade. So it is computerized. And what we do to give value to your clients is the simple thing is there's what seems like chaos in the market. Like it seems like chaos. Like, you know, if you've been to Playa del Carmen, you walk down Fifth Avenue, and there's 1,000, 10,000, 100,000 people walking down the street, but there's actually a pattern to it. And what, you know, people are, you know, they walk on the right, they walk on the left, and there's a pattern to the markets. And but one thing I have to say, there's no pattern in the market that's exactly like the last pattern. It's always like a snowflake. I call it a snowflake. You know, it's cold, it's you know, it melts, but it's not the same. Every snowflake is the same. So is the market. So everybody tries to pinpoint, here's where this is going to go, and here's where this is going to go. And you know what? That doesn't work, in my opinion. What works is that you scale into trades and you scale out of trades. It doesn't matter if you buy or sell any market at any time if you apply those principles. But there's certain models that you can use to get your better first entry price, and that means a lot. And so when you start your trade, my suggestion, if you can do 50 contracts, to start out with 2, maybe 3, and then scale into a trade and do the same thing as scaling out. And that's what Go Fish Pro does. It scales into trades and scales out of trades automatically. But the most important thing that we were talking about before was reverse stab buy sell. So here's a stab buy where it went below the 1.5 deviation. So that's a buy. It goes back up to the Keltner band and then back down. Here, it did it again right here, did it again right here, did it again here. And so what that means is, yeah, you can fade the market on a 45-degree angle, but be aware that the market's probably going to continue. And that's called a reverse stab buy. So it's a great entry. You can use a Jordan entry on that, where it goes down below, comes back up, you put the sell stop right there, and it goes down. And the last thing I have for today with you, Larry, is my dad, Walter Bressert's best trade. So my dad developed 2 indicators. One was called the double stoke, and the other one was called the B line, Bressert line. And they're completely different math. And you can see it here on the screen. On the bottom screen here, you have the red line, and on the top you have the green line. So the way it works is let me try to spread this out. If the red line is down here in the gutter and the green line comes up, let me find another one here. It's down here in the gutter, and the green line comes up, which is a double stochastic. And what we did with what I did to improve my dad's indicators, we took a 3 average of the value, and then we showed that value instead of just a green line. And then I gave it bars too to show how high each length was. And when the red line's at the bottom or top, let's say the bottom, and the green line comes up on top, like right here, that's a sell. And so I don't trade indicators. And I heard Larry's segment yesterday or 2 days ago, I think. And he says, you don't trade indicators. And I tell people the same thing. You do not trade indicators. Indicators give you a view of when the market's likely to turn. Because indicators are lacking. They're 1 bar behind. And now our indicators are real time, but for the most time, all the math, I'm a math guy. All the math is based on where the last price is, right? And so indicators are, in general, moving averages shown a different way. Everybody has a different way of showing an indicator. And we have a number of indicators that we do. Now, let me show you one thing here, just 1 second. Now, this is a different indicator. This is called a VMI. The VMI, what it does is we measure how many contracts are bought at the offer versus sold at the bid. And then we do a candlestick chart of it, and then we do a 3 average of that. And you can see right here, the VMI went up here on the bottom of the chart. And look right here, went down. And what did the market do? Went down. Now, remember we were talking about the reverse stab sell? Hang on 1 second. Where were we? Here we go. Or here, the MA trade. There it is again. Now, remember we were also talking about take your halves off. Let's say you were short the market, right? You were short the market. Market came down to a stab buy, a trading cycle low, and then all the way back up to where you entered. Had you not taken your halves off, right, where would you be? So if you take your halves off, then you come back up here and you can sell again. So my thought process is, I'm a day trader, and we day trade every day live. And my thought is you have to take your halves off. So when you're trading, I suggest heavily that you don't go all in and all out, because you still have to make your 50 points in the NASDAQ or 80 points in the NASDAQ. Most people that I get a hold of, they're trying to make like 5 points, get in, get out 5 points. And what does that do for you? So I did a test. I developed a software program called Best Direct, and we did a report, and I did it company wide, and the report came out the same every day. Let me tell you what the report said. People won 70% of the time. I was like, that's pretty amazing. But let me tell you the second half of this. That people hung on to, because they had the time of how when they entered and exited, and people hung on to trades for 3 to 4 times longer than winners. And here's the kicker. You ready for this? They lost 4 times more than they won. Now think about this for a second.
Amazing
so this
statistic.
this report was pretty amazing to me. So what it showed me, that people like to win. Like they feel good. Hey, look, I got this trade, I won. But did they really win? Right? They made $25 on a trade, but they lost $200 on the loss, right? And that's why people lose day trading. Because what happens is they feel better. Yeah.
Hey, we're going to take a little break. We'll be right back with Jerome Bressert.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back with Jerome Bressert. And Jerome, would you tell the folks a little bit about the type of company you have and how the folks would reach you if they'd like to get more information and if you have a trial service?
Absolutely. We have a 2-week free demo, and if you don't, we use NinjaTrader. If you don't have NinjaTrader, they give a 3-week demo as well with free data. My website is alpha-hunters.com, alpha-hunters.com, and we have a free trade room that you can log into on the right side, and you can watch me trade live. In fact, I'm up $56,000 today. You can see on my program. This tells you how many trades I did. I have 16 trades here, all winners in a row. And I use this program exclusively. And my people in my room really love watching me. And the people that apply the principles, and what I mean by principles is that you scale into trades and you scale out of trades. You don't go all in, you don't go all out. Those people have shown in the trade room their results, have done extremely well. And it's hard because it's different. It's a different style of trading because it's not about being right. You don't have to be right on the market. It doesn't matter if you buy or sell, as long as you apply money management. And what I mean by that, you start small. You always start small. In my opinion, And then you accumulate positions. And I'm not afraid to be down, because you have to be down to go up, because there's nobody, like I said, your mom, your sister, your brother, nobody knows where the bottom tick price is going to be. But if you scale into a trade, then you have a better option, or better odds, is what I say, of doing well. And we do this every day live. So we have a live trade room. You can watch me trade live every single day. So,
hey, thanks for joining us. We're going to have you back on in a few weeks, Jerome. Thank you for being with us, folks. Jerome Bressert.
Thank you so much. All right.
We'll see you Monday, folks, at noontime. May God bless.